It may be overdue to an extent. We've had a nice rise of 36% since the April lows, and I believe today's decline is the biggest in more than 6 months. But it's good to see the VIX spike. The VIX spiked at 1.29% today. That's the 51st largest ever spike in the VIX. So we're a top 1% move in sort of what I'd say the market seeking safety. And so I think it's a good flush that's happening today. I would like to say the market is concerned, but unless there is a real structural change, this pullback is a buying opportunity.
While the broader market might be experiencing a significant pullback, Lee's analysis provides a deeply contrarian and optimistic perspective. He characterizes today's decline, the largest in over 6 months, not as a sign of structural weakness, but rather as a good flush. The critical indicator he emphasizes is the VIX, which witnessed its 51st largest spike ever, a top 1% move signaling a frantic scramble for safety among investors. For those attuned to market psychology and technicals, a VIX spike of this magnitude is not merely a measure of fear, it's a profound signal. It indicates that institutions and large players are actively hedging, buying volatility as a proxy for selling everything, a maneuver often preceding an interim market low. This initial surge in fear, paradoxically, lays the groundwork for opportunities, aligning with the market's historical tendency for strong forward returns in the immediate aftermath of such volatility spikes.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
We get it. We're still, the bull market we heard earlier, still intact. But your take on today's move and what may lie ahead?
Well, Brian, it may be overdue to an extent. We've had a nice rise of 36% since the April lows, and I believe today's decline is the biggest in more than 6 months. But it's good to see the VIX spike. The VIX spiked at 1.29% today. That's the 51st largest ever spike in the VIX. So we're a top 1% move in sort of what I'd say the market seeking safety. And so I think it's a good flush that's happening today. I would like to say the market is concerned, but unless there is a real structural change, this pullback is a buying opportunity.
Wow, 51st biggest move for the VIX. So why is it good that the VIX is responding? What does that signal?
It shows you that investors are seeking protection. And as the VIX is a measure of expected volatility of the largest 100 stocks. And so a spike in the VIX is really a market saying, okay, I need to get out of everything, but I can't sell everything. So let me hedge it by buying volatility. And that is usually a sign of an interim low. I mean, I don't want to say I think markets are bottoming today, but we know that the forward returns are pretty good 1 month and even 1 week later. So I would say if someone says, are we higher a week from today? I'm going to say the odds are actually really good. Or, we might even be 60 points higher.
Well, wow. But that's happened. That's what's been happening, as we talked about earlier in the show, Tom, that we've seen these buy the dip buyers come into the market. We get a day like today, the dip buyers come in, we're higher a week later. Do you expect that to happen again, absent some further escalation with China?
Yeah, I mean, anything's possible, Brian. And I think that the markets lived through this February to April, and it was a day by day panic, and maybe there's echoes of trauma people are thinking about, and we do know that this, these are important issues. So I wouldn't want to be glib in saying, hey, this is nothing. Because the market is making a big move. But to me, if I said, okay, what are the reasons stocks have been attractive for the past 12 months? It's been about the innovation coming from AI, and it's the innovation as Wall Street looks onto the blockchain, and now it's the Fed that's beginning an easing cycle. These three things have structural tailwinds that aren't disrupted because of potential even rare earth dispute with China.
Do you want to see the market not end on its lows? We're not on our lows right now.
Well, it's Friday, and it's a long weekend. So as you know, a lot of people like to shut down their computers. So I wouldn't be surprised if we might see the market close on its lows, but to me, I don't think it's a signal. As you know, markets rarely bottom on Fridays anyway, so maybe Monday is the flush, but then, that's the buying opportunity.
Lee delves into the strategic implications of this market response, arguing that unless there's a genuine structural shift, this pullback constitutes a prime buying opportunity. His confidence stems from several underlying market strengths, particularly those relevant to the crypto space. He highlights 3 structural tailwinds that remain robust and largely immune to short-term geopolitical squabbles, even a potential rare earth dispute with China. The relentless innovation driven by AI, the transformative potential Wall Street recognizes in blockchain technology, and the impending easing cycle from the Federal Reserve. These are not ephemeral trends. They are foundational shifts that continue to make risk assets attractive. While acknowledging the potential for short-term panic and echoes of trauma from previous market downturns, Lee maintains that the core reasons for market attractiveness over the past year, including the expanding integration and adoption of blockchain, are undisturbed. He notes that the market is already pricing in a half-life for tariff-related news, suggesting any related market impact will be transient.
I think there is a risk, but I also think the catalyst for this move makes the risk of a test of 4% on a closing basis less technically significant. So, as you see the charts I put in, the NASDAQ was what I picked, of course, because all you technicians out there, it's having what we call a key reversal day. Higher high and lower low than yesterday, and certainly looks to close below yesterday's low. And what makes it a key reversal is that the high it made today was a new intraday all-time high before it reversed lower. Now, we've had a couple of these already, so I would caution that many would like to see 2 out of the 3 indices have key reversals before jumping on it, and the catalyst being such an exogenous issue versus something internally with the markets. Now, we're making new low yields across the entire Treasury curve right now, 2s through 30s, Brian, and as you look at the chart, a couple of things should jump out. First of all, we're on pace now to close at about a 3-week low in 10s, which underscores that as big a move as it seems on the day, because we settled at 414 and a 10, so we're down close to 10 basis points. We also settled at 412 last Friday, which means on the week we're only down about 7 or 8 basis points. Now, I'm not dismissing that, but it isn't as huge as one would think considering the news, and I think that really states it all, that ultimately the markets, in my opinion, are believing that this, like all the other tariff issues that were market moving, has a half-life that is pretty short. Now, the dollar index, look at the dollar. It's pretty amazing, actually. Yes, it got hit, but it's still sitting around 99. It settled last week at like 97 3/4, so it's up substantially on the week. I think that's a positive sign, and it gives me a little bit more confidence that today's move, as important as it is for the reasons of tariffs, just isn't going to be around very long.
Well, you heard, Rick, my earlier point to the guest, which is, to Senator Gregg, that if there is some change over the weekend, we get some different social media post or commentary that everything's fine with China and they had a good phone call, does everything reverse and kind of rip the other way?
Yeah, I think absolutely it does. I'm not sure how much of a rip we get, because, as I said, when you look at the Treasury complex and the dollar index, it really isn't ripping even right now. But I think it would reverse much of what's going on. I think for 10s, the significance of today is which side of 4% we close at. And the next time we get a headline that dismisses some of the tariff intensity, how quickly it may move back above that level.
Furthermore, Lee's technical analysis offers additional layers of insight. He points to a key reversal day in the NASDAQ, characterized by a higher high and a lower low than the previous day, before closing below yesterday's low. While he cautions that ideally 2 out of 3 major indices should exhibit this pattern for confirmation, the current catalyst being an exogenous issue rather than internal market weakness reduces its long-term technical significance. He also examines the Treasury market, noting new low yields across the curve, yet emphasizes that the weekly move in 10-year yields is not as dramatic as the daily headlines suggest. The dollar index remarkably remains substantially up on the week despite today's hit, reinforcing his view that the underlying strength persists. Ultimately, Lee posits that any de-escalation in geopolitical tensions, even a simple social media post, could trigger a swift reversal. For the discerning crypto investor, the takeaway is clear. view significant VIX spikes and exogenous shocks not as threats, but as potential entry points, particularly given the enduring tailwinds of innovation in blockchain and the broader technological landscape.